Without further ado, I would like to start the first session, which is a presentation from the panelists. First, I will invite Mr. Zulkifli. Mr. Zul, today he will share to us regarding the 2020 perspective from Bursa Malaysia. So, Mr. Zul, you have 12 minutes for the short presentation. I will remind you if you have 2 minutes left. Please, the time is yours, Mr. Zul.
Thank you, Ignatius, and very good morning again to everyone. I'm very happy to be part of the conversation. And as the first speaker, actually, it's very challenging because we need to express. Anyway, I'll try my best. If we can move on to my first slide. Next. Okay. As we all know that globally the COVID-19 has disrupted global supply chain, and with that, our economic growth, everything, it affected very quickly. A lot of people are losing their jobs. Smaller businesses are closing down everywhere. But at the same time, there are also things who benefits, from the whole situations. So in Malaysia, it's not exception to Malaysia as well. If you look at the left-hand side of the slide, the bank, our central bank, Bank Negara Malaysia, has actually reviewed or cut the interest rate several times this year, and as it is now at 1.75%, is one of the lowest in our history. In fact, we haven't seen this kind of level since 2008, 2009. What does that tell you actually? With this kind of interest rate environment, the good thing about Malaysia is people started to look at other options. For those, especially for the market perspective. Previously, all the investors, they just simply put their money in a fixed deposit. But now, with that kind of interest rate, actually, they started to look for options. This is quite good, actually, from our perspective, from a stock market perspective, which I will elaborate a little bit more later on. And I'm not sure whether you can see this slide. It's a bit busy, and it's a bit blur from my side, but I hope you can see it. But on the right hand side at the top, we all know, I'm sure you have heard as well, that Malaysian GDP actually contracted by 17.1% in the second quarter this year. This is when the pandemic started to hit, sometime in March, April. And IMF and World Bank, we all know, projected that the global 2020 GDP growth will go down to the level of minus 4.4 to minus 5.2% respectively. And then, as I said earlier, consumer confidence, weakened very badly. You don't see that much of activities going around anymore, at least for Malaysia. And then weaknesses in the labor market conditions. Currently Malaysia's unemployment rate is about 4.7% in August, which is actually one of the highest that we have seen over the last few years. Even though the unemployment rate has improved a bit compared to May, we saw the rate was around 5.3%. And one of the sad things that we see, all of these things, whether you like it or not, will impact the corporate earnings. And for us, we have seen companies announcing lower than expected results recently. So this is not really a good news for the stock market. And one of the things that we are quite worried is like, we don't know when this will end. So, the uncertainties will loom for a while, and I think, it will add to more volatility to the marketplace, not only in Malaysia, but I suspect in the region as well. So can we move to the next slide? Okay, for Bursa Malaysia, I think the same thing is happening with the other stock exchanges in the region as well. We try to help our market participants to cope with the pandemic. So broadly, all of our measures can be categorized under two buckets. First of all is the financial related measures, and the other one is a non-financial. For the financial one, for instance, we gave a fee waivers for companies who wants to go public, in the form of processing fee is waived, as well as the initial and annual listing fee, as long as their market cap is below 500 million ringgit. So basically, we are trying to help the smaller ones. We also give a rebate of 50% annual listing fee for 2020 for companies who are affected by the pandemic. And this will be measured by whatever results they announced in their quarterly announcement. And also, those are for the issuer side. But for the brokers, we also gave some flexibility in terms of managing their margin accounts, and then also we had relaxed certain conditions, for under this category. And all this, will take place until at the end of this year. And then for the non-financial measures, some of the things that we have given to our market participants include time extension to submit their financial statements. And we also gave a flexibility for them to conduct their AGM. And also, we also, gave some a flexibility with various reportings that they were supposed to submit to Bursa Malaysia. Okay, can we move on to the next slide, please? And on top of all those measures, we also, try to manage the market to make sure that, everything operates in a fair and orderly manner. For instance, like we want to manage our investors' confidence. We all know, at one point in time, everybody was panicking, not knowing what to do. So we want to make sure that, all of the investors are equipped with relevant information. So we work very closely with the POs. POs actually are the brokers. That's the term that we use in Malaysia to ensure that there's a good market conduct. Our surveillance team work extra hard to make sure that there's no manipulation of data or anything like that, to mislead the investors, especially the retail investors. We also monitor closely on the material announcements by PLCs. So we want to make sure that whatever they announce are relevant and accurate. I think that was very important, when there's so much uncertainties and volatility in the marketplace. On the stakeholder engagement part, we also engage and work closely with the POs, the brokers, to make sure that there's no system disruptions. As I'll show you later on in one of my slides, like the trading activities has gone up so much in Bursa Malaysia, for Bursa Malaysia this year. And some of our POs actually, unfortunately, are not quite ready to manage that kind of volumes for their trading system. So we work closely with them. We have to make sure that there's no system disruption, because that will definitely affect the market confidence. So system connectivity, capacity, and stability of their trading system. We work very closely with them to make sure that everything is good. And To manage the market also, we introduced or we adjusted certain market controls like the dynamic limits, static limits, circuit breakers, and we also suspended the short sellings that will be effective until year end. And last but not least, the area that we worked very, very hard on was investor education. Just because people are staying at home doesn't mean that they should be deprived from getting all the information. So we work, our investor education team worked extra hard this year, to make sure that all of the information, because we cannot do the physical event, at least they have been transmitted online. In fact, in June this year, 3rd June, if I'm not mistaken, we launched new portal just to help them.
Sorry for interrupt, Mr. Zul. You have 3 minutes remain.
Oh, really? Okay, I'll speed up. Okay, moving on to the next slide.
Thank you.
Okay, as I said earlier, okay, for these slides, if you look at our index, Bursa Malaysia, actually we did quite well this year compared to all of, in fact, we are the best emerging performer among the emerging markets. But having said that, in 2019, we were the worst performer. So if you look at to the right-hand side on the sectoral indices, some of the, as I said earlier, some of the companies actually benefit from this pandemic. If you look at the healthcare and technology sectors, particularly the healthcare, the index, went up by 197.3%. This is as at September this year. Okay, we can move on to the next slide. Okay, this slide actually captured, like the foreign flows. As you can see, all of us suffered by seeing the foreigners exiting from our market. Thailand, suffered the most, and Malaysia is second. And if you look to the right-hand side, at the bottom, those shows the foreign shareholding for Bursa Malaysia. Actually, even though if with all these foreign exiting, actually our foreign shareholding, is still at a very safe level of 20.9%. So despite all these foreigners exiting the market, actually, we still have substantial amount of foreign shareholders owning the shares in Bursa Malaysia. And I would say this is particularly the strategic shareholders. Okay, if we can move to the next slide. Okay, one of the things that I said earlier, because of the lower interest rate, actually, one of the most interesting happened for Bursa Malaysia. Actually, we see a huge increase in retail participation. So if you look at the ADB, for our retail, the ADB has gone up year to date by 231% year to date. And if you look in 2016, retail participation only accounted 13% of ADB, and this year accounted 33% of the ADB. There have been that. If you look at the right-hand side of the chart, to the amount of 11.68 billion ringgit at September. In fact, it has been a Bursa Malaysia's strategy over the last few years. At one point in time, 70% more than 70% of our market actually were dominated by institutions. So people were complaining because institutions, for being the long funds, market was a bit boring and dull. So one of the things that we tried to do, in fact, so much on because we also want, while increasing the retail participation, we want them to come in an informed manner, so not just simply coming and trade. I think we have started to see the results. More participation from our retail in Malaysia. Okay, next slide. Okay, I won't touch too much on this one, but I just want to highlight the points that we see more and more younger people
I'm sorry,
opening
Mr. Zul, I think
accounts and
the time
coming
is
in
up.
the market.
Sorry for interrupting, Mr. Zul. Can you, for example, give the conclusion remarks before you end the
Okay,
presentation?
okay, can we just move to the last slide? Okay, okay, this slide basically captured, like as I said earlier, the pandemic, has some good sides to it as well. And we see, and lucky thing for Malaysia, actually, we have quite a number of companies who are in the healthcare sector, particularly the glove sectors. These are the companies who actually are supporting our index as well as yeah. And then we also, I think, in order to survive, I think everybody needs to work towards digital transformation. There's no doubt that one with the new norms and like less interaction, physical interactions. I think those are the steps everybody needs to move forward. And also another interesting thing that we have also identified the bullet point on the right hand side at the bottom, actually, there's a need for sustainable growth in terms of SRI and Sharia compliant investings. So maybe these are some of the areas actually, that will shape the market in Malaysia over the next few years. With that, I will conclude my presentation.
Thank you very much, Mr. Mustafa, for your very insightful presentation regarding the current condition in Bursa Malaysia. And second, we have Pak Laksono. So Pak Laks will share us regarding Indonesia capital market development. So Pak Laks, you also have 12 minutes for the short presentation. We'll do the Q&A in the last session. So please, Pak Laks, the floor is yours.
Ya, terima kasih Pak Denny. Assalamualaikum warahmatullahi wabarakatuh. Good morning, everybody. I hope you all can hear my voice clearly. What an extraordinary year 2020. I agree that this is one of a lifetime situation that we have been experiencing in a bad, in a good way actually. So let me start with what happened in Indonesia Stock Exchange with the first slide. The first slide, please. I think we can say that our market has been quite volatile. If we can take a look at the chart here, the fixed index on the yellow and the yellow band and in yellow line, and the Jakarta Stock Exchange, Indonesia Stock Exchange is on the blue line. Obviously, at the beginning of the pandemic, we are all experiencing a major volatility in almost every part of the world. Things has been clearly calmed down a little bit, and then we do have a spike in volatility in the month of July and in September. But after that, things are getting more calmer. I would say that our market has not yet returned back to its normal volatility, but nevertheless, it has calmed down a little bit. And this has been actually been the attraction of our market for, especially for the retail investor that like to punt into the market. So next page, please. Here we can see actually the average daily trading value on a regular market, meaning that this is done only on the regular trading without the crossing board. If you take a look at the 2020 year to date, the average trading value is only just slightly lower than last year at 6.3 trillion compared to last year at 6.6 trillion rupiah. And if you take a look at the blue bar chart, you can see that how the retail investor has been dominating our market in terms of daily transaction. It has been growing on a steady base since 2015. At that time, is 40% of our market is dominated by the retail investor, but now the figure is 51%. And we do have quite a big shrinkage in domestic institution trading value. Last year was 25%. This year to date, is only 18%. The foreign institution has been relatively stable at 31%, although obviously this figure this year is mostly an outflow. Next. Similarly, in terms of the equity ownership, we have seen the retail ownership in our market has significantly increased, almost by double if we compare to the figure in 2015. Now the retail investor owns 12.3% of our market, the domestic institution almost 40%, and the remaining, which is 48%, is owned by a foreign institution. Now, despite the outflow of the foreign institution, the ownership of foreign shareholders is remain high. Last year is 51.7%. Now it's dropped a little bit, but still a significant 48% of our market is owned by a foreign investor. So I think this is one of the reasons why we think that foreign investor is still very important, but we also very happy that the domestic investor, especially the retail investor, has been very active and actually acting as a shock breaker or shock absorber of those funds outflow, which is year to date totaling $3.2 billion from our equity market that has been absorbed by domestic investor, especially the retail investor. So this is a new unprecedented development that we think is very good to our market. It's also show that finally that we do have a lively and vibrant and also a strong retail domestic investor that help us in difficult times like this. Next page, please. So who are they? Well, mostly these retail investors are young people. They are millennials. If you take a look at the top middle chart, is 48% of them are millennials, i.e. they're below 30 years of age. 61% are dominantly by male investor on gender wise, and if you take a look, while they contribute 48% of our total investor, obviously they still have a relatively small kind of investment. Right now is about 15 trillion rupiah, as compared, for example, on the age bracket of 51 to 60, which is about 9% of total investor. They actually comprise of about 97 trillion of investable money that is already being put in our market. In terms of education, they are mostly bachelor's degree, 46% of them, and they are can be considered on an income base as a middle class Indonesian, of with 58% of them generating an annual income in the range of 10 to 100 million rupiah annually. Yeah. So this is the demographic bonus that Indonesia enjoy, and hopefully this will be part of our sustainable investor going forward. Next page, please. So here is the chart, the two charts that basically shows that on the left-hand side, how the average daily active investor has been developing over the past 5 years. It has been growing on a steady basis. From 2016, there are 26,000 average daily investor transacted in our market on a daily basis. It's been growing on a high double-digit basis. Now is 76,000 investor traded in our market, and mostly, obviously, a domestic retail investor. This year has been growing significantly by 39%, and if you take a look at the month of August, we reached the highest number of average daily active of equity investor of 113,000 investor traded on the average in the month of August 2020. On the right-hand side of the chart, we see here how the investor has been growing. Pak Hussein from OJK this morning mentioned also that currently we have about 1.4 million investor as of end of September 2020. It has been growing steadily. The total investor, including those who are investing in a mutual fund, is about 3.3 million people. It's been growing strongly, but again, it's a big homework for us, because obviously in terms of the total percentage of the Indonesian population of 270 million people plus or minus, it is still relatively small. So this is something that IDX has been continuously improving on how to attract more and more investor into our capital market. Next page, please. Okay, this shows that how the investor been transacting in our market. I think I would like to put more attention on the chart on the right-hand side. Here we see basically the investor has been using more and more online trading services. It has been growing significantly over the past 4 to 5 months. This transaction through the online method. Now, this seems to be surprising for us. It is actually surprising because the online trading platform has been in the market over the past, I don't know, 8 to 10 years ago, but only recently gaining popularity. One may ask why the sudden interest. I would say quite similar to what happened in Malaysia. Interest rate in Indonesia has gone historically low. Currently it's about 5%. It is not low by say for example Singapore or Malaysia standard, but for Indonesia standard is very, very low. So people looking for other alternative investment to gain more of their
sorry Palas for interrupting. You have 2 more minutes left.
Okay, thank you, Danny. And the other one is obviously people have free time, given that most of them working from home. They don't go abroad, which is the big part of the spending for most middle class Indonesian. They don't shop around because of the situation right now. They don't eat too much outside. So there's plenty of funds being undeployed, and these funds goes into the capital market, some of it at least. And it's also been shown by the fact that the liquidity in the banking sector is still plenty, and basically we are Indonesia Stock Exchange, one of the beneficial party that from the situation. Just one more page, Pak Denny, next. So what to do with our market? I think we are going to introduce more and more new products. We have overhaul our ETF to make it more attractive and more liquid. Our ETF product is probably the largest and the most type of ETF being introduced already in the market by ASEAN standard. And we are going to introduce new products like IDF 30 futures, basket bond futures, single stock futures, and warrant going forward to make our market more attractive. And also from the index point of view, surprisingly here in this page, that the sustainable index, in this case the Sri Kahati index, which is the green index so-called, is one of the most used index and one of the most important. So going forward, this is something that we are going to do. We are going to launch a new initiative in the green index because the demand is definitely there. So with this, I would conclude my presentation today with again saying that he has been unprecedented year for us in a good, in a bad way. And the good part is obviously with the very strong participation from retail investor. Thank you very much, Pak Denny.
Pak Laksono, for your very insightful presentation. You also mentioned several recent development from IDX that I believe will be useful for our investors today. And next, we have Dr. Surapol from the Stock Exchange of Thailand. He will share with us regarding the Thai capital market landscape in recent years. So,
Thank
like
you.
the others, Dr. Surapol, I will give you 12 minutes for the short presentation, and the Q&A session will be in the last. And I will remind you if you have 2 minutes left. So please, Dr. Surapol, the time is yours.
Thank you so much. Good morning, everyone. I would like to share with you the development of the stock market in Thailand. A lot of the message that I will speak will be quite similar to the previous two speakers. I think we are experiencing a very similar event and the experience in the market. So please go to my page 2, please, on the slide. Next, yeah. Basically, we observe higher trading volume. This is largely because of the higher volatility in the market as well as greater retail participants. Usually, every year we receive about 100,000 new investors, but this year alone, just only the first half of this year, we have close to 200,000 new investors, and a lot of the investors that just opened the account are young, and very interestingly, a lot of them, when they open account, they start trading right away. So this is something that we observe, and I think it's very similar to what other market observe. As a result, we noticed a 19% increase in average daily trading volume in this year as compared to last year. On the right-hand graph, as similar to other market, the index dropped because of the effect of the COVID on the economy as well as the foreign fund outflow. This is similar. So next page, please. But if you take a look at the sectoral index, you notice that despite the overall drop in the index, some sectors actually do benefit from the COVID situation. And these are the sectors that involve with consumer product because people spend on the goods that they need to buy, as well as the technology products. A lot of people stay home, they use ICT, they use telecommunication like what we are doing the video conference now, and also the agriculture product because Thailand also produce a lot of the rubber growth that is used a lot in the medical instrument. So this has been the sector that's benefit. We noticed that the index of these sectors, we so-called the sector that's able to adapt or benefit from the COVID situation also increase. And if you take a look at the IPO, you notice that some of the IPO that enter to Thai market this year are the companies that are in this industry, the rubber growth, the computer circuit industry, for example. Next page, please. This page shows the volatility of the market. This is similar to the previous speaker. You notice that the blue line, which is the standard deviation percentage range of the daily SET index movement, jumped up about 5 times during March. This is when a lot of exchange, including the SET, has introduced some of the measures to make sure that the volatility is in control. We no longer have this measure in place because, as you can see from the graph, that the volatility in the blue line is now at the similar level as compared to the pre-COVID period. So we are in the we are keeping watch, but now everything is in the normal mode. Next page, please. This is the sectoral breakdown on the left-hand side, but I would like to look at the right-hand side graph. This is similar to other market. We experience higher proportion of retail investor. Normally, SET is about equal proportion of foreign and the retail. In the recent year, there's higher proportion of foreign, but in just this year, we observe more retail participants. This is from both more new accounts as well as more trading from the existing accounts. I'm not saying that the other sector are trading less because the overall pie is bigger. In all of the investor type, be it retail, foreign, institutional, they're all trading at the higher daily average volume. But in proportion term, retail is now in greater proportion at around 43%. Next page, please. We also have quite a number of products, not only stocks. One thing that I like to highlight, in time of volatility, we also observe increase in volume of the derivative contracts, and especially on the SET 50 index futures as well as gold futures. This is something that has been quite popular this year in addition to the stocks. Next page, please. This is something that we want also to promote more of the connectivity to this region. This is something that we work with other exchange and as well as to bringing the linkage of the products. For example, we have DR of Vietnam ETF. This is in 2018. So Thai investor who are interested in invest in Vietnam can buy a DR that is listed in Stock Exchange of Thailand, and the DR would be have the underlying in Vietnamese ETF. What we notice is that after the product is established, we observe not only greater volume of trading in Thailand DR, but also greater volume of the trading of underlying in Vietnam, 70% of which is from Thai investor. So this is something that could be a win-win, and in the spirit of the regional exchange, this is something that we can do more. On this, I'd like to highlight that as the ASEAN Exchange, we have developed the website. It's called the ASEAN Exchange website. If you're interested, you can take a look at that, ASEANexchanges.org. This is some place that you can find all the information from the 6 exchanges all in one place. Not only the stock information, but also research, as well as some information for if you're interested in contacting each of the broker in our country. Next page, please. Another highlight that I think the Indonesian colleague mentioned is that one of the things that we noticed is that investor, retail as well as foreign or institution are now paying more attention to ESG. ESG stands for environment, social and governance. We done a little study in our exchange. We noticed that investor in choosing which stock to buy in Thailand, they place more attention whether the stock is in our local ESG standard, which is THSI. So they place more emphasis on that. And we also about to publish a study saying that if you take the ESG score into account, the performance of the investment perform quite well during this time where right now the index is quite volatile. So this is something that is becoming a trend, not only as a PR opportunity, but as well as the investor actually pay attention on the being good. Okay, so this is something that we are noticing. Next page, please. Also similar to other presenter, we noticed that there are more online usage. This is something that is quite interesting because we try to push this for quite a while. Online trading for Thailand has been quite in a high ratio already, 70 or 80%. For the new generation, it's almost 100% trading online. But the digital in general has been quite been catalyzed by the COVID because I think as people stay at home more, they connect to us via online. One example would be that normally for the stock exchange of land, we have event inbound roadshow and we do it physically. We call Thailand Focus. Normally we accept about 1,000 investors that are able to join the event. But this year is the first time we do it 100% online, just like what we do here. We noticed that the number of viewers increased about 20 times. And in other area, we also have a lot of online class, and we saw the surge in the investors at home. They learn more about the investment during the COVID lockdown period. So this is something that is like a blessing in disguise that a lot of the digital trend is becoming more of reality. Also, the government just passed the law that allow us to do more of the activity online. For example, conducting annual general meeting for companies via digital video conference. So this is something that could be the trend that is lasting, has some positive impact. So COVID not only have the negative, but also have some positive on this front. On next page, please. This is my last page. I like to highlight some of the theme that investors are still watching for investment in our stock market. The first is high dividend. Given a lot of the drop in the stock price, so it turned out that some opportunity for investor to invest in the good stock that has a high dividend given the rebase of the stock price. So this has been quite popular. The ZTHSI, as I mentioned, people are
Sorry,
paying more
Dr.
attention
Surapol, you
to.
have 2 more minutes left.
Yeah, they are paying more to the ESG or sustainability issue. So this has also been quite popular. The CRMV exposure, we are still developing this. As I told you that we as the ASEAN exchange, we should do more of connection. So this is something that we can link our product as well as investor together. And for Thailand, the well-being via the service economy. At the moment, the well-being on the tourism side has been heavily affected by the COVID. But however, on the health side, similar to our Bursa colleague, we observed that a lot of the equity on the health hospital has been doing quite okay. So this is something that to watch for because it's the core strength of the country. So I would like to summarize that as you say, this year has been quite unprecedented, but at the same time, the unprecedented come not only as challenge but come as opportunities. Greater retail proportion, higher focus on sustainability issue, as well as the ability to capitalize on the digitizations of the capital market. So this is the 3 things that I want to mention. So thank you very much.
So thank you very much, Dr. Surapol from the Stock Exchange of Thailand, from your very insightful presentation. Now, last but not least, we have from Singapore Exchanges, Ms. Janice Khan. Ms. Janice will share for us maybe regarding the recent capital market development in Singapore Exchange. So Ms. Janice, please, you also have 12 minutes to share your thought regarding the capital market, and the floor is yours.
Hi, good morning, fellow panelists. Thank you, Ignatius, for the introduction. As today's theme suggests, and many of the speakers have spoke before me, this year is unprecedented, it's extraordinary. I would also think this is a year of transformations, as the disruptions will drive business model evolutions, and exchanges will adapt in the ways we operate, including very basic daily routines and operational workflows. Across the world, there has been a significant increase in the adoption of digital services. I think many of the markets have experienced similar things, both within and outside the organization. More so to comply with the various social distancing measures that our government has set on us. So let me take the opportunity to share a few perspectives from Singapore. On the onset of the virus outbreak, the exchange in SGX, we have focused primarily on three key areas. First and foremost, being the health and well-being of our employees and investors. Secondly, is to work seamlessly with our stakeholders across the financial community to ensure that our marketplace remains robust, uninterrupted, and accessible to both our local as well as international participants. And most importantly, we also want to contribute to the community to help those who are affected to recover from this pandemic. So with some scenario planning, SGX was very fortunate to recognize the risk of the business disruptions of COVID relatively early on. And hence, we have taken proactive steps to prepare for a potential lockdown scenario in the workplace. So as early as February, we activated our BCP and split our staff into separate teams to work from 2 office sites. At that time, Singapore has not started lockdown yet, but we thought, why not, right? Use this opportunity to practice our BCP. So we also rotate people to work from home and took a painful decision to also cancel all events involving external parties to happen on our premises to start the social distancing measures. For those of you who know Singapore, it will be very challenging in the month of February as we are in the midst of the Lunar New Year celebrations, and many festive activities and networking sessions has already been organized and invitations were sent. So we have to cancel all of them and also cancel all business travels. So when the COVID situation in Singapore deteriorated in April and our government started announced a lockdown, here in Singapore, we term it as a circuit breaker, like the stock market. Only 10% of our staff are permitted to work in the office. So by then, SGX already have practiced about 2 months of operating with very minimal staff on site. So we are able to control key systems remotely and adapt quickly to the situation. As a matter of safety and precaution, our companies, we have an enterprise risk team. We procure and distributed face masks, hand sanitizers to all staff, including those who work from home. Everyone who comes to office need to wear a mask. And we have a lot of stickers around the office on safe distancing for at least 1 meter apart from everyone at all times. There's also something that we did quite radically is we closed all the depository counter service. So we urge all investors to go online for their transactions. So this is something quite difficult, as you know, for a lot of the older investors who are not used to using the digital platforms. So we do have staff as well as the iPads in place to go through some of these steps with the investors and urge them to go home to perform the transactions. So for the community, the SGX introduced a care package that's about $5 million to support and relieve the measures for the outbreak. So this is to bolster the additional efforts of our government by the financial community, so that Singapore will remain a resilient global marketplace. So the 5 million it will be given out over a period of 12 months, and the package comprises of 2 parts. 1.5 million contribution is for National Healthcare Support Program, including our Courage Fund that is run by our national charity, the Community Chest, and remaining 3.5 million is used to support our listed companies on our market, as well as our employees and contract staff. So we believe that our contribution is important as we experience record volumes on our market. We also would like to contribute back to our community and to the larger ecosystem who has been there to support the Singapore economy. Because of the early internal readiness, it has allowed SGX the time to focus more to also coordinate across our financial community during the circuit breaker. So that includes broking firms, depository agents, banks, our market makers who are critical to the securities and derivatives markets operated by SGX. So it is 100% uptime for the entire period. Like many markets, we experience good volumes, settlement instructions at the peak of the pandemic in the first half of the year. So it can be operationally challenging. So we have to adjust some of our cutoff times so that our brokers can continue to put in all the requests and process all the transactions before the start of trading the next day. So one could imagine that if you are not adequately prepared, the voluminous transaction can be challenging because everyone mostly is operating from remotely. SGX as a market operator, we believe that keeping the markets open is essential since the financial markets are critical for managing risk and safeguarding the resilience of the economy. So I believe that the role of an exchange for price formation during this period has intensified during this crisis because of the higher market volatility, as most of the exchanges have also experienced. So we kept our markets fair and orderly. So our dynamic circuit breakers are working well for securities market. Our price limits are working for our derivatives market. More so to avoid any large price gyrations from happening. So there's a couple of areas I would like to highlight to the group that the pandemic has actually played to some of our strengths. First, I think it has reinforced the multi-asset strategy that SGX has been building. Our shelf of products, now comprising of equities, fixed income, currencies, and commodities contracts, have facilitated clients to manage portfolios comprehensively across different asset classes amid the heightened uncertainty. Secondly, our derivatives market have clearly benefited clients who need to trade and rebalance their portfolios round the clock and even on public holidays. And we have seen like 2 very long holidays during this period, which is the Lunar New Year holidays in China during February and the Japan Golden Week in May. So this flight to quality marketplace that is expected of international participants on SGX, we have been living up to the expectations. Similar to most of the markets as a result of the pandemic, we embrace a lot of digital platforms usage, like moving our academy training classes, that's for the retail investors, as well as our depository services fully online. Listed companies also held their AGMs virtually for the first time. And of course, all staff meetings and interactions are largely on video conferencing like this to minimize in-person contact and interactions. So since June this year, our circuit breaker has ended. So our economy has slowly opened. COVID cases in Singapore has fallen significantly in recent months, very low or zero local community cases on a daily basis. So as of now, about 50% of our staff can work on site in 2 offices, still wearing masks and of course with full social distancing measures still in place. So for Singapore, we are also looking to reopen our borders in a safe manner with air travel bubbles. For instance, we
James,
now have a...
To remind you, you have 2 minutes left.
Okay, thank you.
Interrupting.
No problem. Yeah, for instance, we now have a reciprocal green lane arrangement with China and South Korea for essential business and official travels. So, of course, we also wish to continue to work on the different countries, especially in our ASEAN neighbors. The full resumption of air travel and normalcy of activities, I think will still take a long time. All in all, I think Singapore and SGX, we have adapted well and recovering well from this pandemic, but we cannot take things for granted. We will continue to stay vigilant and combat the virus while operating safely and responsibly in this new normal. My last wish is hope a vaccine will be available soon for everyone, so that life will return to normal for all of us. Thank you.